Equities, by definition, these represent residual interest in net assets after you deduct all liabilities. So it doesn't have an obligation to pay the holder anything apart from declared dividends. However, the holder of the equity instruments has a contractual right to get any residual interest in the event of liquidation. They also get certain ownership rights, and they get to be exposed to equity price risk. Suppose that the shares are listed in the stock market, the holder will be exposed to the price fluctuations of the shares. So as issuers, usually in our perspective, lesser risk ang equity in terms of financial risk. Pero mas maraming trabaho yan kasi the more shareholders and investors you involve, the more owners you have to deal with long term. Yung creditors, basta mabayaran, wala na. Pwede na kayo magkalimutan. Pero ang equity holders, hanggat invested sila sa'yo, hanggat sila na nagdada-invest, you have to deal with them long term. Types of equity securities would be common. Common shares, yun yung most the typical ones which has ownership rights, voting rights rather. Preferred shares, meron siyang elements of behaving like a debt security. So some would have fixed maturity or callable in nature. Some would have fixed dividend rates that in substance would look like debt securities, but in form they are preferred shares. Stock options and other equity derivatives are also types of equity securities. So a key item that the corporate treasury must be involved is the dividend policy that they have, especially for corporates who have accumulated retained earnings. So in taxation, there is what we call inappropriately accumulated earnings. So if your retained earnings already exceed 100% of your capital, paid in capital or paid up capital, the inappropriately accumulated earnings tax will force you to pay tax on that excess, either so that you will be forced to declare dividends up after. Now, for most corporates to avoid that tax, they have to have a dividend policy in place and have appropriations of retained earnings that is board approved for a particular project. So you have, if you don't want to declare dividends because you need to retain funds organically, some companies would declare, I would appropriate it so that it will be outside the coverage of the dividends. But for those who have dividends, retained earnings that are available for dividend declaration, they use their dividend policy as a guide on when and what would be the appropriate instance wherein they can declare dividends on behalf of their shareholder, balancing this between the needs currently and in the future of the company versus the promised returns to shareholders. Now, dividends could be split between regular and special. Para siyang siopaw, no? Yung regular dividends, yung maliit na siopaw, yung special, yung malaki, may pula sa ibabaw. Pero hindi naman siya ganun. Especially for listed companies, they would term it regular and special as a signaling. So, mahirap kasi i-work back or i-run back ang dividends, i-roll back ang dividends, especially pag lagi mo na siyang ina-announce to the point na markets are already expecting you to declare regular dividends. So regular dividends, yan yung dividends na kaya mong i-sustain long term even if you don't meet your targets or if you encounter problems. Special dividends are declared for specific reasons. Special nga siya is because you have a year na maganda talaga yung kita, you have really excess money to declare as dividends, and you term it as that. That way, madali mong tanggalin yung special dividends kasi special nga eh. The following year, wala na yung reason for declaring special dividends. Pero yung regular dividends, mahirap siyang bawiin. In actual experience, some companies who roll back their regular dividends, it becomes controversial because the investing community would take it as a signal that the company is encountering problems, and which we don't want for people to take into consideration, to have an impression. So to manage that, sabihin mo regular itong dividends ito special. So like for example, PNB, they celebrated their 100 years, 2 years or 3 years back, and they declared a special dividend to commemorate that. So, yung susunod na dividend declaration ng PNB after 100 years ulit. Joke lang. So, yun, it's important that the dividend policy is documented and approved by the board, and it's a reference point to show that shareholders may expect some form of payback from their investment in the form of regular dividends based on the company's dividend policy.